Hello folks, welcome back to another exciting video and welcome back to RALLYTOP Investing. Now in today's video I want to show you a 1-minute scalping strategy that can help you grow your small trading account. Now this strategy I'm about to show to you now is a very simple and straightforward strategy. Okay, now if you have a small trading account and you wish to grow it faster than you ever thought, then you need to stick around with this video till the end. Okay, now there are rules I will give to you which you must maintain if you want this strategy to be very effective. All right, now the number one rule is this: you need to identify this pattern I'm about to show to you now. That's the first rule. You must see this pattern before you take any step. All right, now what is that pattern? The pattern is this 3-candle formation pattern. All right, a 3-candle formation pattern. This 3-candle formation pattern is a powerful reversal pattern. All right, powerful reversal pattern. Now let me show it to you. Take a look. Candle number 1, this bullish candle where you find my cursor. Candle number 2, the same bullish candle. This bearish candle. Candle number 1, candle number 2, bearish candle. Candle number 3, bullish candle. All right. Now I'm going to give you 3 rules concerning this very pattern. All right, now the rules I'm going to give you concerning this pattern is specifically for this pattern. All right, it is not about the strategy per se, but about this pattern, because this is the first thing you need to identify on your chart before you talk about applying this strategy. All right, now in a bullish structure such as this, in a bullish momentum, you want to see this 3-candle formation. All right, the 3 rules I want to give to you is this: number 1, the middle candle of the 3-candle formation must print the lowest low. That's number 1 rule. Number 2 rule, the 2 candles on either side of the middle candle must print higher lows when compared to the low of that middle candle. Now the number 3 rule, which is the catch, is that the candle to the right of the middle candle, which is candle number 3 in this instance, must close above the high of the middle candle. Now there is another variation. If the number 3 candle does not close above the high of the middle candle, then if the number 4 candle closes above the number 3 candle, this low is still valid. If the number 4 candle does not close above, then the number 5 candle closes above the high of candle number 4. This low is still valid, provided no price action has come down to take out this low. All right, the same thing in a bearish momentum. You want to see candle number 1, candle number 2, candle number 3. All right, the middle candle of this 3-candle formation must print the highest high. The 2 candles on either side of this middle candle must print lower highs when compared to the high of this middle candle. And the candle to the right of the middle candle, which is candle number 3, must close below the low of that middle candle. All right, if the number 3 candle does not close below, then if the number 4 candle closes below the low of number 3 candle, this high is still valid. If number 4 candle does not close below the low of the number 3 candle, but you have number 5 candle close below the low of number 4 candle, this high is still valid, provided there is no price action that has come up to take out this high. So these are the 3 rules concerning this very pattern. So now to the general rule of the strategy. Number 1 is this: you want to see this 3-candle formation on your chart before you do anything. That's the first rule. Number 2 rule is that you want to use 15 minutes as your higher time frame, and then 1 minute as your entry time frame, meaning that this pattern must be found on your 15M. That's number 2 rule. Now, number 3 rule, like I explained before, is that you need to find a candle that closes above, in the case of a bullish momentum, or a candle that closes below the low of that middle candle in the case of a bearish momentum. All right, now these are the rules for this 15M time frame. By the time we get to 1M, I'm also going to show you additional rules on that your entry time frame. All right, please pay attention, because it's a powerful strategy. All right, it's a powerful strategy, but very simple. All right, now take a look. This is the middle candle. As you can see, the candle to the right of the middle candle did not close above the high of that middle candle, but candle number 4, all right, closed above the high of candle number 3, and that's what we are looking for. And therefore, you mark that candle number 4. All right, that's that candle number 4. Then we now drop to our 1 minute time frame. All right, so we want to get to our 1 minute time frame and see our entry opportunities from that vertical line we have drawn. All right, very simple strategy, but effective. Okay, so let me zoom out. Let me zoom in for us to see clearly what we are looking for. Now, as you can see, okay, this is the vertical line that we placed on our 15M. Now, to the right of this vertical line is where we'll start looking for our trade setups or our entry. All right, now remember all the rules I told you about on your higher time frame, which is the 15M, must be applied here. All right, now I'm going to give you additional rules that you will add to that rule I have told you on the M15. All right, so the additional rule here is this: you want to see a structure break, particularly minor structure break. All right, it's either you see a minor structure break or a major structure break, but majorly or primarily I will advise that you look for minor structure break, because this is a scalping strategy. So you want to target 1 to 5, 1 to 10, and then get out of the market. All right, now on your 1M, take a look, guys. After this vertical line, all right, you can see that price violated structure somewhere here. All right, it violated structure. That's a minor structure break. All right, let me denote that so that you can know that's a minor structure break. Okay, so that's a break of structure. Now, this is the 3 candle formation. Candle number 1, this bearish candle. Candle number 2, this bullish candle. And candle number 3, this bullish candle as well. Now, the 3 rules are applied. The first rule is that the middle candle of this 3 candle formation must print the lowest low. And as you can see, it has printed the lowest low. Now, rule 2 says the 2 candles on either side must print higher lows when compared to the low of this middle candle. And as you can see, they printed higher lows. And number 3 rule, which is the catch, is that the number 3 candle, or the candle to the right of the middle candle, must close above the high of the middle candle. And as you can see, it has closed above. This candle closed above. All right, and therefore the 3 rules are fulfilled in this pattern. Now the next thing is to look for OB. Look for your OB, and your OB is the middle candle of the 3 candle formation. So let's mark out our OB. All right, this is your OB here. Okay, that's your OB, and as you can see, price returned to it, And if we want to take this trade, we want to frame it, this is the way we frame it, guys. All right. Now, let's get back to that H1 to find out, to that 15M, to know where we can place our take profit. All right. Where can we place our take profit? Let's go back there and see. Let's see where we can place our take profit. Where is it? Okay, here we are. All right. Now, our take profit can be here. This is your first take profit. All right. So you can, after taking partials there, you can leave your trade to run. Okay, you can leave your trade to run if you so desire. All right. So that's where we are going to take our take profit. Let's get back to the 1 minute, guys, and see what is going on there on the 1 minute. All right. Let's see the 1M and see what is going on. So we want to take our profit. So you move this to this point where you want to take your profit. All right. But please don't place it exactly on that point. Don't place it exactly on that line, because sometimes price may come there, may come very close, and then turn around and start going the other way around. All right. So if we now took this trade, take a look at what we would have made. Would have made 8.93% of our account. All right. 8.93 increase on our account. That's massive. All right. So let's see. Did it get to our? Yes, it got there. As you can see, if we are to stretch out this, as you can see, price got there and give us 8.93 R. All right. That's the first trade, first example. All right. So let's continue to find other opportunities. Let's see if we can find other opportunities in the market. Okay. Now, after that, after this, after this, we have another trade setup here. Take a look, guys. There's another break of structure here. There's another break of structure here. Can you see that? That's another break of structure, guys. Let's denote that. That's another break of structure. Okay. So now, after that break of structure, take a look at this candle. Candle number 1, candle number 2, and candle number 3. All right. And as you can see, the middle candle printed the lowest low. All right. And the candle to the right of that middle candle did not close above. The next candle did not close above, but number 5 candle, as you can see, this number 5 candle closed above. All right. And therefore making this low, cementing this low as a valid low. So this candle, this middle candle now is our OB. So we can mark it out as our OB. Very simple but powerful strategy, guys. Simple but powerful strategy. As you can see, price came straight to that point. If we are to, all right, frame this trade, let's see what we would have gotten from this trade. All right. Where is our? We are targeting the same high. All right, targeting the same high. This would have given us 8.42 R. All right, would have given us 8.42 R, targeting the same high. All right, that's number 2 example of this strategy. Now let's move further. Now take a look again. Price broke structure here. This is a powerful strategy, guys, but very simple. Price broke structure here. All right, price broke structure there. So let's denote that again. So price broke structure there. Now take a look. 3 candle formation. 1, candle number 1, candle number 2, candle number 3. All right. As you can see, the middle candle has printed the lowest low. Now the candle to the right of the middle candle did not close above the high of that middle candle. All right. Candle number 4 did not close above candle number 3. Candle number 5 did not close above candle number 4. But candle number 6 closed above candle number 5, cementing this low as a valid low. So where is your OB? Your OB is this, guys. Your OB is this. All right. This is your OB. Let's mark it out. Let's mark it out. This is your OB, guys. All right. Let's see whether it came to. Okay, so that's your OB. And let's frame this trade. If you have to frame this trade, take a look. All right. Where do we target this high? The same high. All right. That would have given us what? 5.68%. Now take a look. 5.68%. This would have given us 8.42%. And this would have given us 8.93%. Can you see that? Wonderful strategy. All right. Wonderful strategy, guys. Only that you maintain the rules. All right. Now that is about on this pair. Well, maybe we can check for one more pair. Let's check for AUD USD. AUD USD. Let's check on that and see what we have there. All right. Now let's get to the 15M first, and so that we know what we are doing. 15M. Okay, let me remove this. Let me remove this first. So the same rules must be applied. The same rules, guys. All right, follow the rules. Let's start from here. Let me clear up this thing here. Let's start from here. Candle number 1, candle number 2, candle number 3. All right. The middle candle has printed the lowest low. 2 candles on either side have printed higher lows when compared to the low of this middle candle. And the number 3 candle, which is the candle to the right of that middle candle, has closed above. Once you see that close above on your higher time frame, which is the 15M, you mark it out. All right. And then you will now have to scale down to the 1M. You need to scale down to the 1M. All right, to look for your trade opportunity, for your entry opportunity. So let's see, where are we on the 1M? Where is that? This is our vertical line. All right, so we want to start looking for trade opportunities to the right of this vertical line. All right, so let's see. Now take a look at this. This would have been a very good trade setup, but price didn't return to it. Because why? It broke structure here, guys. It would have been a good trade setup. It broke structure here. All right, it broke structure there. That's a break of structure. Okay, it broke structure there. All right, and it fulfilled all the rules of our pattern. All right, so this would have been your OB. This would have been your OB, but price has not returned to it yet. But price will in future return to this very powerful OB here, guys. All right, so but for now, let's move ahead. Now we are looking for a break of structure and our 3 candle formation. All right, clear signal. That's what we are looking for. Very clear signal. We don't want to look at the one that is not clear to us. We want to see clear signal. All right, clear signal. This met our rules, but price didn't return to it, did it? Price didn't return to it. It came very close, but it didn't return to it. Let me still mark that out for you to see. Let me still mark that out. This is a break of structure, guys. This is a break of structure. All right, and our 3 candle formation is here. Okay, our 3 candle formation is here, and our OB supposed to be this one, but price didn't return to it. They did. Let's see what that price returned to it. I do not think so. Price didn't return to it. It came very close, but didn't return to it. Can you see that, guys? All right, so but we are looking. Okay, here, do we have anything here? Yes. Do we have a break of structure here? We have a break of structure here. Have a break of structure here. Okay, we have that break of structure, right? Are we right? No, price too didn't come back here. Price didn't come back here too. Let's see. Have a break of structure there, and then you have this, our OB here. This OB is here. Our OB is here. The price come back to it? Well, we don't know, but that is our OB. All right, that's our OB there. Why? Because here is a break of structure. We need to follow the rules, guys. This is a break of structure. We must observe it, whether price returns to it or not. We have to observe our rules. Okay, that's our break of structure. Okay, and after that, the 3 candle formation is complete here. Take a look. Take a look at that 3 candle formation. All right, candle number 1, candle number 2, candle number 3. The middle candle has printed the lowest low. The candle to the right of the middle candle, which is candle number 3, has closed above. So this is a good OB, but whether it comes back to it or not, we don't know. Can you see that? Can you see that, guys? Can you see that? Now, remember, we didn't frame. Okay, this one didn't work out. Did we frame this trade? Did we see our take profit level here? We made a mistake. Let's frame up this one and see our take profit level. Let's see where we would have taken profit here, guys. You need to know where to take profit. In this case, we are going to go back to that M15 to look for where we can target. So we get back to that M15 and then we will know where to target. All right, where is the M15? Come on, where is our M15? Okay, the first one, this first one, all right, is the first one we are looking at. This first one here. All right, where is it? M15. Yes, this is the first one. So where do we target? We target here, guys. This is our target here. This is our target. That's our target. Okay, that's our target. So we go back to M1 and see what is going on there. Where is our target? We have to look for M1 target. We have to go back to M1 and see. Aha, we are here now. Aha, take a look, guys. Aha. Yes. Where is our M1 target? Here. That's our target here. That's our target here. Don't make it too close. That's our target. And that would have given us 5.2, guys. 5.2. All right, percent on our account. And now this didn't work out. We narrowly missed this one because it didn't tap into our OB. Now, but this one did. So let's frame this one too. This one did. We want to go long, so we can frame this too. Guys, this is a banger. I'm giving you for free. I'm giving you this for free, completely for free. Okay? Where are we targeting? Where is that our target? Let's see our target. Where is it? Let's bring our target here. Where is that our target? Okay, so we have to go back and see the target of this one. We have to go back and see the target of this one. We have to go back to that M15 to see the target of this one. All right, we have to go back and see the target because we don't know the target of this one. Let's see M15 again. Let's see the target of this last one. This last one. Yes, this is the target. Aha, this last one. This is the target of this last one. All right. This is the target of this last one. So that's where you target, guys, in this last one. All right. And you can take partials if you like, if you so desire. So, but for me, that is my target. All right, on the M15. So I go back to that 1M to be able to see where I would have targeted. Let's get back there to that. Okay, so we go back there and see. This is a big expo that I'm giving to you for free, guys. All right, so our target now is here. This is our target, guys. All right, and this would have given us 6.78. now think about it. Think about all the profits you would have made, and as you can see, price got to our target and even surpassed it. All right, simple strategy but very powerful, guys. All right, follow the rules, maintain the rules, and you'll be amazed at the consistency you will make in the market. This scalping strategy is to help you grow your small trading account. All right, only that don't be greedy. 1 to 5, 1 to 10 max. Get out of the market. As simple as that, guys. Now, if you loved what we have shown to you today, please don't forget to give us a like. We are interested in you giving us a thumbs up to help YouTube algorithm to share this video to a more larger audience. All right, please give us a thumbs up, and if you are new to our channel, please subscribe. All right, and hit the notification bell so that anytime we drop a new video, you'll be the first to be notified. And if you want to really understand how to approach the market, if you want to be consistently profitable in the market, and you want to always be on the right side of the market, not 100% of the time, but at least 80 to 85% of the time, then you will need to attend our boot camp that is coming up between December 1 and 5, 2022. Okay, December 1 to 5, 2022 is a 5-day boot camp. All right, only for $50. Only for $50, guys. It's an end of year bonanza to tell you thank you. We are going to be teaching you in that boot camp our 3 most powerful concepts that we use for our trading strategy. We are going to reveal to you the entirety of our trading strategy, all woven into these three important concepts. We are going to look at institutional structure, all right? Not the retail trader structure. Institutional structure, the structure that the banks look at. We are going to look at inducement and liquidity in the market, okay? And we are going to look at your point of interest, high probability point of interest, not the normal OB that people think about, all right? Only for $50. So please make hurry to register now. We have only 5 slots, only 5 slots, and as I'm talking to you now, we have only 3 slots left. So please hurry to register, okay? I will not take more than 5, all right? More than 5, because we are going to reveal our strategy to you in that bootcamp. All right, guys, thank you for listening to me, and have a wonderful week ahead.